Most people spend their entire lives working for money, but some people have figured out how to make their money work for them. The difference isn't luck, it isn't a high-paying job, and it isn't being born rich. For many of them, it starts with one thing: the stock market. But before you invest your first dollar, there are a few things you absolutely need to know. The first thing you need to understand is that the stock market isn't a giant casino, despite what social media and the news sometimes make it seem. It's actually a marketplace where people buy and sell ownership in businesses. Think about companies like Apple, Microsoft, Amazon, or Coca-Cola. These companies didn't become giants overnight. They grew over many years by creating products and services that millions of people use every day. When you buy a stock, you're buying a tiny piece of one of those companies. You're becoming a part owner. If that company grows and becomes more valuable, the value of your investment can grow as well. But here's something many beginners don't realize. Stock prices don't move in a straight line. One day they're up, the next day they're down. Sometimes they fall because a company reports disappointing earnings. Sometimes it's because of global events, economic uncertainty, or simply because investors become nervous. These ups and downs are completely normal. In fact, some of the world's most successful companies have experienced massive price drops before going on to reach new record highs. This is why experienced investors don't panic every time the market falls. They understand that short-term price movements don't always reflect a company's long-term value. The next thing you need to understand is the difference between investing and trading. Trading is about trying to profit from short-term price movements. Traders may buy and sell stocks within days, hours, or even minutes. Investing is different. Investors buy quality businesses with the intention of holding them for years. Imagine planting a tree. You wouldn't expect it to become fully grown in a week. You water it, protect it, and give it time. Investing works the same way. The longer you stay invested in strong companies, the greater your chances of benefiting from their long-term growth. Another common misconception is that you need thousands of dollars to start investing. You don't. Today, many investment platforms allow people to begin with relatively small amounts. What's more important than the amount you invest is how consistently you invest. Small investments made regularly over many years can become surprisingly large because of compound growth. This is when your investment earns returns, and those returns begin earning returns of their own. Over time, that growth starts to build on itself, creating a powerful snowball effect. But perhaps the biggest mistake beginners make has nothing to do with choosing the wrong stock. It's letting emotions make their decisions. When stock prices are rising, people become excited and rush to buy. When prices fall, fear takes over, and many sell at a loss. Ironically, this often leads people to buy high and sell low, the exact opposite of what successful investors try to do. The best investors stay patient. They focus on the long term instead of reacting to every headline or market swing. Finally, remember this: no investment is guaranteed. Every stock carries some level of risk, which is why experienced investors spread their money across different companies instead of putting everything into one. The stock market has created wealth for millions of people, not because it's a shortcut to getting rich, but because it rewards patience, consistency, and discipline. The biggest mistake isn't starting with a small amount. It's spending years waiting for the perfect time to invest. Because the longer you wait, the less time your money has to grow. And in the stock market, time is often your greatest advantage. If you found this video helpful, subscribe for more simple finance videos that help you make smarter money decisions. Until next time, thanks for watching.